All right, fantastic. Let's see if this is all coming through loud and clear. I'm going to bring you up on my other screen. And we'll give everyone a minute to tune in. Like always, guys, I'm hoping this has gone live automatically. It looks like it has. Awesome. Hey, we're finally getting rid of all those technical difficulties one by one. Hey, Mitch. Hey, Steve. Korean crispy chicken for tea, hey, mate? That sounds pretty good. All right, guys, I'm just going to quickly share this in the group. I am going to quickly show you the new platform again as well. Is it cricket season yet? I have well and truly retired from cricket season now, mate. And for those of you that don't know, going live on YouTube for our monthly commodities update with a bit of a twist, as you've probably guessed by now. Money for nothing, commodities for free. Dire Straits, for those of you that don't know the title there. So whenever we share a update now in the group, it automatically gets posted to the new platform, Collective Shift. We'll talk about that a little bit at the end, but we want to get through our commodities update. And Marin's been busy at the moment. He's been busy, he's been traveling. And so I am taking the reins. And I think you guys liked the last one. We did something a little bit different. So, hey. Let's see if we can't get 1,000 watching tonight. I do appreciate it when everyone shares in their little groups. Everyone's got their own little Facebook chat groups and socials, don't they, guys? So, volume. I'll try and talk a little bit louder. I'm always a little bit nervous to talk loud at night time because our little fella is asleep a couple of meters away. He's got his rain noise in the background, but I'm always a little bit hesitant. How is the volume now, guys, or has it gone altogether? Is that what you're saying? I can turn it up a little bit more if it's still a little bit too quiet, if you like. I am loud and clear. Awesome. Okay, so thank you to the 180 of you that have tuned in so far. 46 of you have smashed that like button. And last time I checked, guys, it is still free to smash that like button. So if you can smash it, it does help everyone find our videos. Because as you know, we've gone no ads. No ads, so you guys don't have to watch any of them. You don't have to get any of those scams. Yeah. Hey Nugget, in your membership, what's the difference between the spotlight reports and the research reports? I'll talk about that a little bit at the end, but there's lots of different research reports. So we do gold and silver. We have macro reports. We're about to launch our sentiment and on-chain analysis reports. We're launching the NFT reports with Maddie. So we've got lots of different reports. And Bitcoin looks beautiful on that chart. But today we're going to be focusing on the metals. So gold and silver. Gold's in a beautiful bull flag. Silver, very, very similar as always, but just a little bit more volatile. Now, the key to all of this is the king. Is the big US dollar. So let's not zoom out too far. Let's just have a look at this daily chart because this is just picture perfect. I think the markets, I don't know if it's just me, but you just can't argue with how beautiful the technical analysis has been this year in all markets, whether it's things like this, the US dollar index, gold and silver with those bull flags, Bitcoin and the retracements that it's just obeying perfectly. So I always kind of laugh when people say, technical analysis is reading tea leaves. It doesn't work 100% of the time, of course not, but it's a tool that we can use to improve our odds and turn those in our favor. And all we have to do is be better than the person on the other side of the screen. So if we can get, if the DXY can clear this level and get a little bit of strength, then that could mean that all the commodities roll over. Obviously, conversely, if we get rejected from here again, maybe a little bit of uncertainty heading into the election. Oh man, hasn't that been an absolute wild ride in terms of the headlines we're getting out of the US at the moment? But if this does roll over, then that's party time for gold, silver, commodities. Let's have a look at oil as well. Wasn't this a funny one? Do I want the contract crude oil? When this went negative, and they've since fixed this, but I think a few of you we did a live stream, I think, at that time. Now they fixed up this chart, but oil went to minus $40 for those of you that are new subscribers. And that was a wild, wild night. This whole time was just one of the craziest periods to live through. And now we've got these bounces. Let's have a little look at our technical analysis. Almost perfect to the dollar, where we get our 61.8, our golden retracement zone that I love. You guys are probably sick of hearing me talk about this, all our members. A couple of other things we'll look at just quickly. Lumber, we are going to have a look at this one. So, bang. That looks like a crypto altcoin chart, doesn't it? Oh, lo and behold, technical analysis doesn't work. Where are we? Right in the middle of my fib golden retracement zone. Uranium. This is the uranium ETF. This has been in a huge bottoming pattern for years and years and years. One that I still very much keeping an eye on, I really like. One that I haven't mentioned before that I'm not going to cover tonight. Have I got it there? I haven't got it there anymore. There's a couple of water ETFs, and I think longer term, that is definitely something that you want to have your eye on. Let's see if there's FIW. Yep. Okay, so there's a few of these water ETFs, and water, I think, is going to become a commodity. Sounds a bit crazy, I know, but trust me when I say that just like we refine oil, we're going to have to refine water for the billions of people on our planet. So that's a quick look at the prices of a few of the things we're going to look at tonight. Solar, we don't have a solar ETF, I don't think, just yet. There's a lot of companies with the name, First Solar, Canadian Solar. I don't think there's a solar ETF, is there? Not in America. Anyway, you guys can let me know in the comments if there's a solar ETF you'd like to have a dabble in. DH is saying that the volume's still no good. I'll turn the volume up a tiny little bit. Keep you all happy. 1, 2, 3, 4, 5. That should be just a tiny little bit louder. I'm up in the yellow zone. I'll keep going a little bit more. I'm up in the yellow zone. Okay, that's where the guys like me, up in the yellow zone. Let's keep it there. Hopefully you're happy. No more complaining. Beautiful. Okay, so tonight's video is mainly going to be about where the world's heading in terms of this global fiat monetary system, and that is now colliding with the world of crypto, the world of macro finance, economics, as well as your life. Everything we do is based around money and spending and saving, and the biggest investment that people make is their house. In Australia, that's often around $1 million to live in a nice suburb in Melbourne or Sydney, and people don't really give it too much thought other than, when they're looking at buying and how they're going to decorate it. It's really the financial side of things and the math that doesn't get a lot of thought. So, look, I think we're going to have a real rejig about where we place value as a society, and that starts all the way from our sort of commodities that we're going to talk about tonight, all the way through to other, more, I guess, acute things and minor things that tangible versus intangible value. What is really meaningful in life? When push comes to shove, what do you value? Someone's saying too loud. I hope you're joking. Luke. Are you joking, Luke? Please don't tell me it's too loud now. I can never keep everyone happy. I'm gonna keep on cracking through. And I hope you guys are stirring. You're staring at me. Don't stare at me, mate. I've had 1 hour sleep. That's not the time to stir. Okay. So 69 trillion of world debt in one infographic. Now, remember, debt is dollars that have to be paid back at some point in the future. We're pulling demand forward. And so when we hear these stats about whether it's 69 trillion or you hear global debt at closer to 300 trillion and then the derivatives 1,000 trillion, so a quadrillion, you think, well, what is all that money being spent on? Or, when we pay that back, who does it go to? We have to produce economic activity and get dollars circulating, create jobs to pay down that debt. And when you say, well, where's that money gone to? A lot of it is the financial economy, intangible things. The US is just a massive chunk of the world, a lot of it because of the financial markets, rather than some of the smallest little chunks on this graph, which if you actually broke it down and said, well, hey, what do they have? Tangible versus intangible. A lot of these emerging markets are quite resource rich, but there's a lot of other things that it takes to build a good economy, a good GDP. Here we see the percent debt of GDP, higher versus lower. Japan, 17%. That is share of global debt on here. I was going to say Japan's debt to GDP is 240%. So this is where we get to the point where for every dollar that the government are sort of printing or issuing a bond, and then the central bank just prints some money out of thin air to buy it off them, every dollar of economic activity, it's now taking $2.40 of debt. And so they're not the only ones. A lot of economies, particularly at the moment, we've sort of hit this escape velocity, the hockey stick part of the curve. I've spoken about this in the past. Imagine if you were an oil company and you get the report, you get all the numbers back and you report to head office and you say, at the moment it's taking us 5 barrels of oil to find 1 barrel of oil. By the time we take into account all the machinery and the digging and the transport, refining, exploration, and they say, well, hold on, that doesn't make sense as a company. We need to shut down. And it's almost where we've got to in this monetary system, where it doesn't make sense. 5, 10, and this is where the Fed, you're seeing them have to come in and bail people out. And in the last financial crisis, it might have been $1 trillion as a round number. And we're already here to the point where 10 years later, it's almost taking 10 times as much, an order of magnitude, because we're on that exponential hockey stick growth. So now it's almost that 10 trillion to sort of paper over the whole, the problem that was only maybe $1 trillion 10 years ago. So in 10 years time, that'll come around sooner than you think. Do we just print 100 trillion out of thin air to paper over all these holes and gaps that are going to be leaking because we've got 100 trillion or 200 or 300 trillion in debt that's now coming down the pipeline? These things are coming due. Someone has to pay them off, default, whatever it is. And that's where the path that you take becomes political if Argentina want to default again, for example. So here we can see a few more numbers. Physical goods, intangible goods. I think most of you have probably got your head around these by now. The fact that something that is tangible is that commodity that's in the ground versus a financial derivative that's just all computers, ones and zeros. Food, water, these things are tangible. A house, intangible. As it's saying here, thin and inefficient markets. It's all a little bit different about, well, what is something worth that's intangible? Mind you, a lot of the software companies have become very, very valuable because of what they do. So it's not to say that things that are intangible don't have value, but I think it's just that argument that the financial world has grown far, far too big compared to the size of the real world and the underlying economy. And you see that sort of pyramid of real stuff versus all these other derivatives that we've kind of based our economy and world on. And that's why it's this house of cards, because when things start to collapse, it ultimately it has to collapse down on real value. That goes through all the derivatives, and then it goes through all the real monies, and it collapses on a real dollar or a real piece of gold or whatever it is these days, because there's nothing even underpinning the monetary system anymore if you think about it. Okay, so next I want to just sort of touch on this theory that I've had. You've heard me talking about how the title of this video, every government that issues their own currency has a printer, and they can print their own money. Now, it gets a little bit nuanced about whether or not you want to say that the government can spend that money into existence, like in China, where they don't really, the relationship between the central bank and the government differs in a lot of countries. So it's, hey, is the government spending it into existence, or is it the central bank that's actually printing that money to buy a bond off the government? If we cut out that step and just go to the government spending it, some people are calling that modern monetary theory, although that idea is not new or modern really at all. But that's kind of the general thinking. And then we've also got the banks, where they loan money into existence, as Steve Keen and these alternate economists talk about. So that's all the different types of money that you can have. And we get now to this stage where political tensions are heating up. Everyone's on edge a little bit. We're starting to hear reports that China and Russia over the last decade have been stockpiling gold. And a lot of that is the gold that they produce. They don't export any. They keep everything that they mine. They sit on it, as well as buy more from overseas. But now we're starting to get these reports about things like copper that they're stockpiling. And it's not really, they had a huge boom with Australia where they poured more concrete in a couple of years than America did in the past 200 years. But they're not going through that sort of boom again at the moment. So you'd have to say, well, why is it that they've got all this copper? They're not using it, so they are starting to stockpile it. And this is that rumor, that thesis that I threw out there a while ago, that when push comes to shove, when the currency wars really heat up and get to the point where people are saying, well, hold on, what is anything worth? Why am I going to keep doing trade with you and keep giving you my fresh fruit and vegetables, my oil, anything of value, if what you're giving me is just this fiat money that you print out of thin air? And it's not on a blockchain, it's not transparent. At the end of the day, we don't really know if China printed 2 trillion or 3 trillion and just happened to buy a heap of oil off Russia, more oil off the US. Hey, Australia, we want all that wine. We're just handing over all this stuff, and we're getting paid in something that's just been printed out of thin air. And there's not a great deal of trust between a lot of countries, even Australia and China, that were kind of, bump buddies, I guess you could say, for 10 years there. How long is this going to continue, where we just keep giving them more and more of our commodities? Sorry, guys. Drink time. So that is something that we want to definitely keep an eye on. And the price of copper futures, we can see that since that crash, when everyone thought, no one's going to be building, everyone's going to be in lockdown. The price of copper goes from $4.50 down to $3.30, bang, all the way back up to $5.50 now. So huge rebound. Next up, we've got the move of getting out of the cities. And so you've got a couple of different aspects of this. You've got a lot of people that are now moving out because they lost their job and they can't afford it. It's too expensive to live in the cities. So now we're hearing about high vacancy rates. Now that has knock-on effects for, again, the intangible economy, all those derivatives, the mortgages, the real estate investment trusts. They're all packaged up into these pretty little investment vehicles and derivatives and sold off to other hedge funds and investment funds. So that's the kind of GFC 2.0, the big short 2.0, if that all starts to implode. I wouldn't be surprised if there's some sort of programs. Remember when China had the programs to get people to move in from the farms into the urban areas? Maybe we'll see that in Western economies where they've got to try and get people to move back into the cities, because otherwise it's just all going to collapse. So yes, people are moving out of the cities. You've also got the super wealthy. So the super wealthy want to move to their own island or their own little bit of paradise, slice of heaven, to get away from it all. And then you've got just the average family that want to live somewhere safe. Maybe there's too much violence where they live. Maybe there's just no jobs, whatever reason it is. And so that's why we saw a huge spike in the price of lumber. So what was this down here? $250 up to nearly $1,000. Is that a ton? I think it is, isn't it, for lumber? Okay, anyway, so you get the point that we saw a huge demand from people building houses as they move out into the the rural urban fringes, or the ideal little piece of. In Australia, everyone wants that little white picket fence home. It's different in different countries. But that's where we saw a lot of the supply dropping off as well. We weren't able to produce as much, but the demand skyrocketed. And when those two things meet, we get this hockey stick growth that has since settled down a little bit. The next thing to talk about are these rare earth metals. And the US and a lot of other countries are super reliant on places like Australia for all these. China actually has a lot of these themselves that they make from their mines. So when we talk about the leverage that they have over other countries, there's multiple aspects in the supply chain of technology, whether it's the software or the hardware itself. And now a lot of these companies in China or the software companies in the US, they're providing goods or services for each other. And so that's on one hand, it's a private company that wants to make money. On the other hand, the US is saying, well, hey, we don't want that chip in a US, spy plane or whatever it is. We can't risk it in case there's some software or firmware embedded on these devices, or we don't want everyone with a Huawei mobile phone in America because it could be the ultimate spying device. These are the software, hardware arguments that are currently, I guess, really topical. But also, if you drill it down a little bit further, it's that, well, where do we get all the rare earths to make these technological devices? And the US is very reliant on China. So they're saying, hey, we can basically cripple the US, things like their defense system. They're super reliant on rare earths. At the same time, one thing I'll probably mention there is the gold and silver. So you've probably heard about how silver, the price suppression arguments, but if you think about how little silver or gold is in an iPhone and how much money Apple make, you'd start to think that a silver and gold producer, particularly silver because it's such an industrial metal, and is it First Majestic, I think, they announced last year that they're actually holding back some of their silver supply from the market. They weren't going to sell into the market at these current prices because they felt that it was undervalued. Sorry guys, I'm just going to get a hanky here. I don't want you to have to listen to my cold again. Run down, need more sleep. Who wants to sleep when it's this exciting though in the world of crypto at the moment? So with my train of thought there, for the first time, we've got CEOs of silver companies saying, hey, we're going to hold back the supply because we don't think that this is a fair price. Maybe it is all those years of manipulation, price suppression. I'm not sure. We've never got any final decisions, big decisions about actually deliberately manipulating the price down. There's a lot of, price fixing at the end of the day and those sort of things, but we've never got a big definitive answer that it's trying to suppress the price of gold and silver for a specific reason. But that little amount that's in a phone, if that goes from being $10 worth of silver goes up 10x and it's now $100 worth of silver, that doesn't really matter to Apple, who's making hundreds of dollars profit on a device. And again, that tangible versus intangible argument, that the phone company Apple is making hundreds of dollars of profit per device. Here we are in the real world. Silver companies throughout this boom over the past few years have just gone broke. That's real jobs. That's hard labor, hardware. Digging these resources out of the ground. They then get it to market. They're selling the good into the market, but they don't get to dictate the price. And they're basically losing money, or it's not worth it. So they should say, well, you know what, we want to set the price of this higher. If you're going to use it in all those iPhones or all those solar panels, you're all making profit. We're all losing money on that commodity, and all the money and the profits actually flowing up to Wall Street, to the intangible financial economy, where they don't have anything without our physical tangible asset at the bottom end of the food chain. And that's where I think things have got out of whack. Can you imagine if it was the other way around and the silver company got to decide, the price of iPhones, or there was an iPhone ETF and speculators got to decide, or, naked short sell 1 billion iPhones and dump the market at 3 a.m. in the morning to suppress the price of iPhones. It's funny to think about these things. Next up here, we've got the oil sector. So go back and watch this video I did about the junk bonds, how this was very close to triggering a collapse in the first or second week of April, just as the markets were tanking. And this video was all about the cost of production for these different countries. And what I said was basically the Fed are going to have to step in and save this market and this industry, because if they don't, there's can you just see? Yeah, you can see this now. Below $30 a barrel, 95% of companies are not making money. And we got down to, well into the 20s. We went to minus $40. So all these companies weren't making money. There's mountains and mountains of debt that they have that's coming due. So this is where we get into the defaults. Again, those derivatives, the financial economy, the intangible economy. It's this massive big thing that's built up off this tiny little thing in the real world that is tangible. And so when the banks have lent the companies money, those companies have issued debt and shares. The brokers have now created derivatives. Those derivatives have been traded to hedge funds. Those hedge funds have bet against them, and they've got insurance on those, and they've sold that to someone else. It's this huge big mess. And so that's why the Fed, they've got to step in and print that $1 trillion to stop this collapsing. Now, America were really lucky that they got to number one oil producer in the world because they could basically use the printing press and subsidize it. No other countries like Venezuela sitting here with these enormous reserves, number one in the world, 300 billion barrels of oil, but they can't. There's a number of reasons. It's obviously more complicated than that, but they don't have the luxury of the world reserve currency and just getting to pump money into their banks, their big, powerful global banks. They pump money into the big corporates. All this money gets pumped into their shares. They get to issue more debt. It's just this big, keep them on the Ferris wheel, big game, and it's all well and good. But now reality hits where, well, hey, there's not enough demand for that oil at that price because you tinkered with the free market so much it's now correcting. And what are you going to do? If the price of oil stays at 20 or 30 for ages, how do the Fed, the government, do they subsidize it? What do these other countries do saying, hey, that's not fair? These are the big, big problems that you create long term by trying to fix things and I guess manipulate the market in the short term. Apologies there, guys. So is it the end of the super majors and peak oil? I'm not sure. We've heard that so many times over the decades, but we definitely have seen a drop off in demand. Maybe things change. A lot of these rigs have just been turned off. We know that they can come back on, but this is a shift. And I know some of you like this, some of you hate this, but this ESG movement, environmentally friendly, this was the talk of the town, 12, 24 months ago. There was ETFs popping up so people could feel like they're investing in something that was, sustainable and green, good for the planet and the environment. But when push came to shove, a lot of money rotated out of those. It's one thing to say you're going to do it, but then when it actually comes down to needing your money or actually wanting to grow your wealth, a lot of people pulled out of those funds. And so now we're waiting to see if the money's going to flow back in. And this ETF, for example, here, this does show that it's stayed fairly constant. This is a US listed ETF, whereas a lot of the energy stocks have been some of the worst performers. A lot of the money's flowed out of them. Those historical ratios, commodities to other markets, commodities severely overvalued. Here we can see countries like Argentina that just rely on resources, and when they run out of their reserves, this is their foreign exchange reserves to try and defend the peg in their currency. And once they're empty, they've got to try and put in these capital controls. Again, it's not just as simple as having these resources and getting rich. It's an entire other economy, and then geopolitics you've got to build around that. But it all comes back to this money at the end of the day, because when they start to run out of these reserves, they put in capital controls so people can't move money in or out of the country. And then it comes down to, again, it's the food, it's the tangible things. Well, how did we get so out of whack where we have an economy where we can't even, provide food and shelter and clean water and basic things? Because look at this. I know this slide's probably a little bit out of proportion and cherry picked a little bit, but Venezuela is this example where it was once a super rich country. It had these jets, fighters, good defense system, socialist president, income inequality, healthcare for all, higher education for all. And some people are saying, does that sound familiar with what some politicians are starting to promise us today? Again, I don't really have a dog in this fight. I'm not too fussed about politics on either side, really. I'm a big believer in that, you need to provide for yourself. No one else is going to look after you at the end of the day. So then all of a sudden, when we have all these, everything's free, everyone's being looked after by the government or someone else, people get kind of, lazy figuratively or, literally. All of a sudden it's the incentive, well, why would I go out there and build that gold mine or build that silver mine? And so now you don't have any silver. So all of a sudden you can't make iPhones or solar panels in your country. It's no longer profitable or possible for you to make that oil. So you've got to try and get it off someone else. And now your currency is collapsing. And now it's costing you twice as much to get oil and food and gold, commodities into your country. And the whole while, you had it so good that your actual economy, your pie, you can think of it as, was just shrinking. You're getting smaller and smaller. So now you've got this smaller and smaller economy and less jobs and less money, and now you're trying to buy these outside goods and your currency's collapsing, so it's actually taking twice as much, and you only had this tiny amount to begin with to actually even buy anything. That's when you enter basically a death spiral. Another maybe thing to think about in the back of your mind is against the oil and gas. Yes, oil is in everything. It's not going away overnight, but there are a lot of uranium mines, reactors around. I think people were completely shocked when I did this video a year ago. I think we've probably almost doubled in terms of the number of subscribers we've got since then. So I would encourage you to go back and watch that video if you haven't already. Something that I knew a little bit about, but yeah, I just found this so interesting when we look at some of the stats. And one of the books on my shelf, one of my favorite books, and I'm not a big reader, I'm a documentary man, most of you guys know that. The Colder War by our friend Marin Katusa, who normally does these monthly episodes with me. I read this, well, I'm not sure, maybe 10 years ago. A gift from my dad, actually, for Christmas. Thanks, Dad. This was all about whoever controls the strategic energy reserves really controls the world, because just like we saw China threatening to cripple the US with rare earths, Russia have got huge supplies of natural gas, oil, but more importantly, the uranium. And on top of that, it's actually the yellow cake. So the yellow cake in that refinement process, it's almost like the rate limiting step that the US can't do. And a lot of other countries, and Russia does that. So when you look at the domestic versus imports in the US for all the uranium that they're using, people have no idea that the US is still using, 50 million pounds of uranium. They've got, I think it's hundreds of reactors powering, I think 30% of their energy grid. A lot of people just have no idea. They think it's Fukushima that we don't really use nuclear reactors anymore. I know in Australia, politically, it's kind of something that is a bit taboo. So a lot of Aussies don't think about this either. But this domestic production in the US has dropped to, 1 or 2 million tons, and the rest, that 50 million, they're reliant on a lot of these people like Russia that can corner them and cut off that supply, cut off 30% of their energy grid. You start to see where I'm going with all this in terms of how exposed the US are to other countries. And this was without COVID, and now we're rethinking these global supply chains. The US has got all this wealth, but how much of it is tangible versus intangible, financial derivatives and la-di-da? Or what does Biden say? Malarkey, wasn't it? I'm not quite as old as Joe, but that was pretty funny. So solar, I think it's official now, and everyone's got their own sources. And some of you will say, "Oh, that's BS," and others will say, "Yeah, that's true, that's great." But solar, the cost is getting right down now, and it is super competitive compared to where it was even 10 years ago. So something we need to be aware of. Oh, sorry. Here's the actual breakdown of the world reserves of uranium. So Australia's got this 30%, but don't make me go down another path about how Australia should have the cheapest, even just in Tasmania with all our hydro dams, let alone these other states that we feed. Australia should have such cheap power, abundant solar, all this nuclear that we could have. We've got huge deserts to build nuclear power plants with. Anyway, really does my head in. Countries most reliant on nuclear energy, nuclear share. So this is for total energy generation. So the US, it says here, is 20% for total energy, and I think for just the electricity power for houses is 30%. But yeah, look at these countries. 76% in France. People are surprised by these stats. So that's basically a lot of what I wanted to talk about tonight, guys. One thing I will mention in terms of the uranium, I did a report on this. So if you head over to nuggetsnews.com.au or Collective Shift these days, we've got all the basic investing info, and there is some stuff there on gold, silver, precious metals. But in this is the member-only platform now, and there are some freebies here as well. But if you scroll down to resources, this is all really nicely laid out these days. So you can click on things like investing. It should have, what uranium investors look for. You can't quite see that behind me. I think that is just about all I had to go through tonight, guys. How are we going for time? I ran a little bit over half an hour there. I'll give you a quick look at the platform. I'll do an official video very shortly, but yeah, beginner's course. This is going to be the best beginner's course in the world. 30,000 words. Every bit of content I've ever made, my team has recycled, repackaged up, and put into a beginner's course. So that is going to be awesome. Resources. I just showed you the community. So Spotlight Report. Someone asked about this before. These are our database of crypto research reports that we want to continue to bulk out. So we want this to be the number one resource in the world for crypto research. You can come here, you can type your project. Our team has put out at the moment, most of these reports are 6 or 7 pages, and it's more fact based. It's not really our opinion. It's not a hey, buy this or sell this or this price or that price. It's the fundamentals on what they're doing. Is it a good team? Is it a good idea? Who are their competitors? What's their upcoming news? So now it's just really about continuing to hire more staff. We're going to bulk this out. We want to have basically every coin, at least the top 100, if not 200, there for you guys to read and learn about. Daily snapshots for people with very busy lives. We want to give you just the boiled down version of what you need to know. Headline analysis is another product with a similar concept there that's more, I guess, macro facing. So we want to cover the big macro news for you as well. Research reports. So as I mentioned at the start, this includes gold and silver, sentiment reports, some of the other stuff that we do, big picture. Maddie's NFT gaming reports will start to go in there now. And I won't say too much. We've always got new surprises in store for you. The help center, that is every question that we get asked gets put into an automated system so that it's there next time someone needs it. You can search for help. Glossary and acronyms for all the words, and then I say that people get confused and what did he mean by that? Member discounts. So I better not show too many there. Members get bigger discounts than all the other discounts we have for our general subscribers. The monthly Q&A. So at least once a month, I do a live stream video for everyone where you get to ask questions ahead of time. And I give you detailed answers from myself and the team in that live stream video. You can watch along live and ask questions live as well in the night, or it's all time stamped and you can go back and rewatch it later. All these are time stamped, so you can go back and see, well, what questions were people asking in February, and is there even just 1 minute out of that half an hour video that I want to watch? Click on the timestamp. All the topics are all there for you. So this is just really cleaning up all the resources we had because we knew that Facebook wasn't ideal for a lot of you guys. But hey, a big welcome. Over 500 of you have joined since we launched this new platform, which is just amazing. I had no idea there was that pent up demand. And as I've always said, every dollar we get at the moment as a business goes to reinvesting and growing this business because I think we're very lucky. I get to do what I love. Here's the team, our full-timers. Here's all our other team members in different capacities. I think there's 20 something on the website now, but we're continuing to employ more people because you guys are continuing to come to us. We want good customer service. We want more research that you want. Thank you for your patience. I know this was really delayed. The Knowledge Center is still completely free for all your friends and family that are getting into crypto. Send them over here. Make sure they watch the videos about scams. All that stuff is there. It's continuing to be added to every day. I'm going to wrap it up there, guys, but I hope you've enjoyed that quick little look through my thoughts and thesis on how long our country is going to keep giving each other their commodities when they're just printing stuff out of thin air. And let me know your thoughts on all that down below. So smash that like button, subscribe if you haven't already, share this around, and I'll talk to you again soon. Cheers.